In this video, we will go into detail about how to disable the accounting system per invoice on the point of sale page, along with explaining its changes on sales management, payments, and inventory movement. To get started, go to the Point of Sale menu, then navigate to the Point of Sale settings page. By disabling the accounting system per invoice, the entire POS session will be treated as a single unit. Instead of creating a separate journal entry for each invoice and each payment transaction, the system will generate a single journal entry for sales, including all invoices processed during the POS session. Additionally, it will create another journal entry for payments, covering all payments made within the session. Note: by disabling the accounting system, per invoice, requisitions and journal entries related to inventory, client, or sales will not be generated until the POS session is closed and confirmed. Additionally, inventory movement, such as product quantity deductions, will not be reflected until the session is officially closed. To demonstrate the change of disabling the accounting system per invoice, I will keep the option disabled and save the settings. Next, I will start a new POS session by going to the Point of Sale menu and clicking Start Selling. I will select the appropriate shift and device, then confirm to start the session. I will then create a sales invoice by selecting a product. Before proceeding with the payment process, it's important to note that when the accounting system per invoice is disabled, partial payments will not be available. Saving an invoice without payment will not be possible. Instead, all invoices must be fully paid in order to be saved. After confirming the payment, I will repeat the same steps to create another invoice. This means I have now created two invoices for the same product. Now let's move to the Session Details page to review the recorded transactions. As we can see, both invoices have been successfully added. To check inventory movement after creating the invoices, go to the Inventory menu and navigate to the Products and Services page. To view the product details, click on the product name. In the Stock Transactions section, we will notice that no transaction has been issued for the product, even though I have created two sales invoices. To do this, go to the Manage Requisition page. As we can see here, no requisitions have been issued for delivery. Now, I will go to the View Session page to close the session by clicking on Close Session, then selecting the closing date and time. To save, the session closure must be validated by entering the received amount, which must match the expected amount. Note: if there is a difference between the expected and received amounts, the system will record the difference as a balance due from the employee. Next, we select the treasury. In this example, it will be the main treasure, and then confirm. Once the session is closed, we will notice two journal entry numbers at the top. The first journal entry is for sales and includes all sales invoices created during the session. As we can see, the sales journal entry transfers the amount from the petty cash to the sales account and the tax account. This means that the petty cash has been replaced with client accounts. The petty cash is for payments and includes all recorded payments in the session. The payments journal entry transfers the amount from the treasure to the petty cash. As a result, the balance of the petty cash is now 0, because the amount was recorded as a debit in the first journal entry and as a credit in this one. Note: up until now, the sold products have not been deducted from inventory. The requisition must be approved by going to the Inventory menu and then navigating to the Manage Requisition page. Here we can see that the requisition for product deduction has been issued and is currently in the Under Delivery status. To confirm it, click on the three dots to the right of the requisition and select Confirm. This way, the requisition has been confirmed and approved. Now, we can review the products sold during the session and their quantities. We can see that all quantities sold during the session have been grouped into a single requisition. If we go to the Products and Services page and check the Stock Transactions section, we will notice that the product deduction has been recorded, but this only happened after closing the session and confirming its requisition. Finally, on the Sessions page, we can see that the session status is now validated. When viewing the validated session, we can observe the two journal entries at the top, one for sales and one for payments. In the requisition section, once the requisition is confirmed, the products are deducted, and an additional journal entry is created for the cost of sales and inventory. Note: the tracking method for sold products must be quantity-based. Products tracked by lot number, serial number, or expiration date cannot be added to invoices. To sum up, disabling the accounting system. Per invoice means operating under a single session system, where only one journal entry is created for all sales. Only one journal entry is created for all payments. Inventory quantities will not be updated until the session is closed and the requisition is approved. When disabling the accounting system per invoice, all invoices must be fully paid. Any other option is not allowed. As a result, journal entries and inventory updates depend on session closure rather than invoice creation. This setting provides an efficient way to manage sales and payments, but it imposes restrictions on payment methods and product tracking. You can enable or disable it based on your business needs.